So markets are doing that thing again where they look calm, but they're quietly pricing in geopolitics, central bank hesitation, and a few uncomfortable earning surprises. The pound is trying to find its footing after a rough patch. Gold is hovering around that big psychological zone known as the $5,000 zone. And the FTSE 100? Well, after flirting with record highs, it finally blinked as miners and headlines took the spotlight. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today we are breaking down the sterling, gold, and the FTSE 100. These three assets are reacting to a familiar mix of shifting rate expectations, risk sentiment, and, well, headline-driven volatility. So let's get into it. Let's start things off with the British pound, and right now sterling is under a lot of pressure. The pound is trading below that $1.35 level, recently falling to around 1.344, making its lowest level in roughly 4 weeks. So what's driving this weakness? Well, it comes down to inflation and interest rate expectations. UK inflation slowed to 3% in January, the slowest since March 2025. Core inflation also eased to 3.1%, its lowest level since August 2021. At the same time, wage growth slowed to 4.2% and unemployment rose to 5.2%, its slowest level since early 2021. So what does all of this mean? Well, it suggests that the UK economy might be cooling. And that has led markets to price in rate cuts. In fact, traders are fully pricing in a 25 basis point rate cut by April, with a strong probability of a move as early as March. And when interest rate expectations fall, currencies often struggle, because lower rates reduce the attractiveness of holding that currency. Now, at the same time, the US dollar has remained relatively supported, particularly after recent Federal Reserve messaging suggested caution on cutting rates too quickly. So GBP USD is currently caught in a tug of war between a weakening pound due to expected UK rate cuts and a relatively stable US dollar due to a cautious Fed policy. Let's look at the charts. Well, technically, GBP USD has broken below the 100-day EMA near 1.346, which has shifted short-term momentum to the downside. The pair is now leaning on the support that is near 1.343. This creates two critical levels to watch at this point. First of all, support around that 1.343 level. If this breaks, we could see a potential drop towards 1.326. And then we have resistance around 1.355, with further resistance near 1.371. So right now, price action is cautious. Almost like the market is testing the floor, trying to see if it holds. And with that, it raises the question, does it hold? Or does momentum continue lower? That being said, let's move over to gold, which is currently trading around that $5,000 per ounce level, holding that psychological barrier. And at this level, it's not just a number, it's a battleground. On one side, geopolitical tensions are rising. The United States has deployed its largest military presence in the Middle East since while the US president has set a 10 to 15 day deadline for nuclear deal talks with Iran. Geopolitical uncertainty tends to support gold because investors often seek safe haven assets during times of uncertainty. But on the other side, the Federal Reserve remains cautious. Recent jobless claims fell to 206,000, showing a labor market that is resilient. And some Fed officials have even suggested that rate hikes could still be possible if inflation remains elevated. And higher rates tend to weigh on gold because gold doesn't offer yields. So gold is currently balancing between safe haven demand and interest rate uncertainty. In other words, gold is waiting on clarity. So let's look at the charts. Gold is compressing around that 5,000 psychological level, which is acting like a magnet right now. Some key levels to watch out for. Well, first of all, we've got support around 4,985. A break below could lead to a further decline towards 4,840 or even the support level at 4,700. Then we have resistance that is obviously at that 5,000 psychological level, followed by 5,100. Should that give way, we could see a potential retest of the all-time high around 5,600. So with compression like this, it often precedes a larger move. The longer price stays in this tight range, the more explosive the eventual breakout can be. So the real catalyst may come from the upcoming US inflation data due later today. And with that, let's finish with equities, more specifically the FTSE 100, which recently pulled back after reaching a new record high. The index is currently trading around 10,655 after falling roughly 0.5% in the last session. So what's causing the pullback? Well, several factors. First things first, mining companies like Rio Tinto declined after disappointing earnings. Banks also fell, with Barclays dropping nearly 4%. But at the same time, geopolitical tension and inflation concerns have increased uncertainty. However, energy and defense stocks performed better, showing that investors are becoming more selective. This suggests that the broader trend remains constructive, but momentum is slowing. So when we look at the charts from a technical standpoint, some key levels to watch out for. Firstly, support around 10,500, followed by 10,360. Resistance is currently sitting at that 123.6 Fibonacci extension level, which is sitting at 10,740. Now, traders, the broader trend here remains positive. But the recent pullback suggests that the market may be entering a consolidation phase. So think of it like a climber pausing halfway up the mountain, not falling, just catching their breath. So as we are heading into today's session, here's the big question. Will inflation data reinforce the dollar's strength or weaken it? Will gold break above 5,000 or retreat lower? And will the FTSE 100 resume its climb or continue cooling off? Because when inflation data, central bank expectations, and geopolitical tensions all collide, markets don't stay quiet for long. And the next move could already be forming. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to atfx.com and, well, go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.